You've been budgeting, saving, and trying to plan for the future. But what happens when the rules suddenly change? With new tariffs rolling out, the housing market could be facing a ripple effect that hits buyers and sellers hard. From construction costs to interest rates, this could mean thousands of dollars lost. In this video, I'll help you understand what's happening and how to stay ahead. Welcome back. I'm Blake Olivo with the Bravo Ridge Group. Today, I want to discuss a topic that's been making headlines and could significantly impact the Des Moines housing market in 2025, the recent tariffs introduced by the U.S. administration. We'll explore what these tariffs entail, their potential effects on the housing market, and what buyers and sellers should be aware of in this evolving landscape. First, let's understand the new tariffs. On April 2nd, 2025, President Donald Trump announced a comprehensive set of tariffs referred to as the Liberation Day tariffs. These include a 10% tariff on all imported goods, with additional higher tariffs tailored to about 60 specific countries. The administration's goal is to revitalize domestic manufacturing and address trade imbalances. To put this into perspective, let's consider the scope and scale of these tariffs. A universal 10% tariff has been imposed on all imported goods entering the United States. This broad measure affects a wide array of products, from electronics to clothing, and notably, building materials essential for construction. Beyond the baseline, certain countries face significantly higher tariffs. For instance, imports from China are subject to a 34% tariff, which is only growing every day, while the European Union faces a 20% tariff. These elevated rates are intended to address specific trade imbalances and concerns with these nations. So, what are the immediate market reactions? The announcement of these tariffs sent shockwaves through the financial markets, leading to significant volatility. Major indices experienced sharp declines. The S&P 500 dropped to nearly 7% over 2 days, marking its worst performance since 2020. This decline reflects investor concerns about the potential for a global trade war and its impact on corporate profits and economic growth. The abrupt nature of the tariff announcements has led to increased uncertainty among investors. Many are reevaluating their portfolios, anticipating potential retaliatory measures from other countries, like China, and considering the broader implications for global trade dynamics. All of this uncertainty is causing a temporary disruption in the real estate market, as well as many investors and home buyers are giving these changes time to take effect. So what is the impact on construction costs? One of the most direct effects of these tariffs on the housing market is the increase in construction costs of materials. The tariffs target essential building materials such as steel, aluminum, and lumber. The National Association of Home Builders estimates that these tariffs could raise the cost of building a new home by, on average, $9,200. This increase stems from higher prices on imported materials, which are integral to single-family home construction. States with a higher proportion of new construction projects, such as Idaho, North Carolina, and Utah, may feel this impact more intensely. In these regions, the added cost could deter builders from initiating new projects, just further exacerbating existing housing shortages. Home builders are expressing concern over these rising costs. The added financial burden may lead to delays in project timelines, reduced profit margins, and in some cases, the cancellation of planned developments. So what are the potential effects on home prices? The escalation in construction costs has cascading effect on home prices and affordability. For example, as builders incur higher costs, these are often passed on to buyers in the form of increased home prices. This trend can make new homes less affordable, particularly for first-time home buyers or those with limited budgets. And while new home prices rise, there may be an increased demand for existing homes as buyers seek more affordable options. This shift could lead to higher prices in the resale market, further straining affordability. The combined effect of rising prices in both new and existing home markets poses significant challenges for affordability. Buyers may need to adjust their expectations, consider different locations, or delay purchasing plans. So how does this affect mortgage rates and buyer demand? In the immediate aftermath of the tariff announcements, mortgage rates experienced a slight decline. The average 30-year fixed-rate mortgage fell to about 6.55%, down from 6.75% the previous week. This decline is attributed to investors moving towards safe haven assets like treasury bonds, which influences mortgage rates. Within the following days, this has actually gone the other direction and mortgage rates have increased. For people looking to buy, this dip in mortgage rates presented a potential opportunity to secure favorable financing terms. However, it's essential to act swiftly, as these rates don't usually remain low for long. If the tariffs lead to higher inflation due to increased costs of imported goods, the Federal Reserve might respond by raising interest rates to combat this inflation. Such actions could drive mortgage rates back up, reducing buyer purchasing power and dampening demand in the housing market. So just keep that in mind. So what are the broader economic implications? Beyond the housing market, the tariffs have wider ramifications. Just like we mentioned before, economists warn that the tariffs could reignite inflation, leading to higher prices across various sectors. The Yale Budget Lab estimates that the price level from all 2025 tariffs could rise by 2.3% in the short run, equating to an average per household consumer loss of around $3,800 in 2025. The combination of increased consumer costs, potential retaliatory tariffs from other countries, and disrupted supply chains raises the risk of a U.S. recession. Businesses facing higher input costs may reduce their investments or cut jobs directly, leading to slower economic growth. The imposition of these tariffs has strained relationships with key trading partners. Over 50 countries have contacted the White House seeking trade negotiations, indicating the widespread concern and potential for escalating trade disputes. One thing to remember is this is exactly what President Trump wanted. The main goal of the tariffs is for other countries to reduce tariffs on America, further allowing free trade. Now, before we cover how this affects us locally, I ask that you like the video and subscribe to the channel. It helps YouTube push our videos to others who also need to know how this affects all of us. Thank you so much. And let's get back to the video. So here's some advice for buyers and sellers. Navigating this complex environment requires strategic planning. For people looking to buy a home in the near future, here are a few tips. Assess your financial readiness. Ensure that your financial situation is stable and that you're prepared for potential fluctuations in mortgage rates and home prices. Act decisively. If you are in the market for a new home, consider locking in a mortgage rate sooner rather than later. As we mentioned earlier, while rates have dipped slightly following market uncertainty, they could rise quickly if inflation ramps up or the Federal Reserve responds with hikes. Consider existing homes. With new construction facing price hikes due to rising material costs, existing homes may offer better value for now. You may also avoid delays associated with supply chain issues or slowed new developments. Stay local minded. Especially here in the Des Moines metro, we're still seeing steady appreciation. Slower than in recent years, but still in the right direction. Home values aren't plummeting, but affordability is a growing concern. So work closely with a realtor who knows the market well and can guide you through smart purchasing decisions, even if it's not me. Okay, now for those of you looking to sell your home this year, know your equity position. With home values up significantly over the past several years, many homeowners are sitting on considerable equity. That equity could be a key to purchasing your next home or paying off debt in an environment where costs are just increasing. Price strategically. In uncertain economic times, buyers are cautious. Pricing your home right from the beginning ensures strong interest and avoids price reductions that could cost you thousands in the long run. Market smart. With fewer buyers actively shopping, your listing needs maximum exposure. Leveraging everything from direct mail to Facebook ads to high-quality video tours is crucial. Relying solely on the MLS or Zillow won't cut it in 2025. Be transparent. Buyers are hyper aware of costs right now. Highlight energy-efficient features, lower maintenance upgrades, and cost-saving improvements to show long-term value and help justify your asking price. The Des Moines housing market perspective. Now let's bring it a little closer to home here in Des Moines. While national headlines are buzzing with uncertainty, our local market has remained relatively resilient. We're still seeing homes move quickly in popular areas like Ankeny, Waukee, West Des Moines, Johnston, Grimes. Now that we are entering the spring market, inventory remains tight, which is helping home values hold steady even with these looming macroeconomic pressures. And let's not forget, Central Iowa's affordability has always been a huge draw. Even with slight increases in home prices, we still come in way below national averages for housing costs. But that affordability could erode if interest rates and inflation climb together. So where do we go from here? We're in a transitional period. Right now, buyers and sellers are watching closely. Investors are adjusting to different asset classes, builders are waiting to see how prices shake out, and everyday consumers are wondering what's next. Here's my opinion. Now is the most important time to stay informed. The best way to protect your future, whether you're buying, selling, or investing in real estate, is to stay up to date on what is going on and partner with professionals who live and breathe this market every single day. So final thoughts. If you're living in Des Moines or considering moving here, I'd love to be a resource for you. My job isn't to sell you a house. It's to help you understand the market and make the right decision for you. That could mean staying put, recasting your loan, connecting you with a contractor for those repairs that you've been waiting for, and many other things. Tariffs, inflation, interest rates, these are all major economic forces. But with the right plan and the right team in your corner, you can still come out ahead. If you have any questions, drop them in the comments below or feel free to reach out directly. I'd love to talk more about how these changes might affect your unique situation. And don't forget to like the video and subscribe to the channel as we post videos about how this unfolds. Thank you so much for watching. and I'll see you in the next video.